Hello everyone, good afternoon to all of you. Welcome to UN Digital class. Today we are going to discuss on a subject relating to basic financial accounting. So on today's class we are going to discuss or we are going to represent the problems and solution relating to accounting equation. So here we will see how the various transactions that affects to a business relating to a particular period, how that will be recorded and what is the effect of that particular transaction on assets, liabilities and capital. So we already discussed that in a business there are various transactions made in every day. So that transaction basically divided into two parts. One is relating to cash transaction, another one is relating to credit transaction. So basically in case of a cash transaction, that means if a transaction is made either through receipt or payment of cash or through check, in that case that is called as a cash transaction. For example, machinery sold for rupees 30,000 on cash. So this is a cash transaction. That means when machinery is sold, we can say that asset is decreases and we get cash of rupees 30,000. But in case of a credit transaction, the receipt or payment of a cash or check, that is not made immediately, that is made at a later date. So relating to credit transaction, we have to make two types, or on two dates we have to make two different transactions. That means when transaction is made on a particular date, as soon as the transaction affect the business, we must have to record it in the books of account on that particular date, and relating to that credit transaction, when the payment is made or receipt is made on that particular date, we have to record that transaction. So that is a case of a transaction that is made two types or two times on a business books of accounts. So now we will discuss what are the various transactions that affect to the business every day and how that will be recorded in business books of accounts, or how that will be recorded in accounting equation, and what is the effect of assets, liabilities and capital on that various transaction. We will discuss one by one. So accounting equation that is represented in the form of assets is equal to liabilities plus capital. We say that assets is equal to liabilities or capital, but liabilities plus capital, or we can also say that assets is equal to liabilities plus owner's equity. When the business is started, the amount contributed by the owner in form of a money or money's worth, that is called as owner's equity, or which is also known as capital. So capital can also be represented as owner's equity, or we can also say that asset means that is the resources of the business, and liabilities means the creditors claim against resources, and owner's equity means owner's claim against resources. So we can also represent the accounting equation that is resources is equal to creditors claim against resources plus owners claim against resources. So dual aspect concept says that in every business transaction there is having two aspects. One is recording for debit aspect, another is recording for credit aspect, and in every cases or in every transaction the amount of debit is equal to the amount of credit. If we have to represent it in the form of equation, then we can say that the assets is equal to liabilities plus capital. That means A is equal to L plus P, where A stands for assets, L stands for liabilities and P stands for proprietor's fund, that is called as a capital. So assets is equal to liabilities plus capital, or asset is equal to liability plus proprietor's fund. If we will represent it in the form of equation, A is equal to L plus P, or we can also represent A minus L is equal to P. That means asset minus liabilities is equal to proprietor's fund, or that is known as capital. So now we will discuss, or now we will work out what are the various transactions and their effect on this equation. That means their effects on assets, liabilities as well as capital, and in every cases we must have to be so that as that is a case of equation, assets must equal to liabilities plus capital. So let us work out various transactions in the form of a accounting equation. So now we will discuss, or we will work out the transactions and their effects on assets, liabilities and capital. The first transaction, that is commencement of a business, that means when business is started by the owner. So there is one transaction on 1st April 2019. Shubham started a business in the name of Shubham Stores by contributing rupees 50,000 as capital. So in this case, we first have to find out what are the various aspects involved in this transaction, then we have to represent it in the form of equation, and we can say that, or we can conclude that the amount of assets must equal to the liabilities plus capital. So here when Shubham started a business, in that case by contributing certain amount as cash to the business, which is the contribution of a money or money's worth by the owner, that is the capital. In that case, one aspect, that is cash, comes into the business. And that is one asset. The second one is when investment is made by the owner, that is called as capital, and that represents capital also increases in the business. Because this is investment made by the owner. So we have to represent it in the form of equation. The equation is equal to asset must equal to liabilities plus capital. So here asset, that is cash, and the amount is rupees 50,000. So when it is started or during the initial period, there is no liabilities. So under liabilities head we represent it the amount as nil, and the amount when it is contributed by the owner, that is a case of investment, and as it is contributed or invested by the owner, that is known as capital. So the capital is equal to 50,000, that means Shubham's capital. So finally we conclude that asset, that is 50,000, equal to nil plus 50,000. So the total of right side is equal to total of left side. The left side amount is equal to 50,000, right side also equal to 50,000. So this is the accounting equation. So the next transaction, that is purchase of assets or goods on cash. So when this type of a transaction is made, that means there is a case of a purchase, and either that is assets or goods purchased, and that is made on cash. This is a cash transaction. So how that cash transaction is recorded in the form of a accounting equation. There is one transaction that is made on 2nd April. Shubham purchased goods worth rupees 20,000. So how will we represent that in accounting equation, taking into consideration the previous equation? As per the previous equation, the amount of assets or the cash is rupees 50,000 and the amount of capital is 50,000. There is no liability. Taking into consideration that transaction, we have to represent the current transaction. So when there is a case of a purchase of a goods, that means in that case the cash amount decreases by rupees 20,000. As it is paid, or this is a cash transaction, we must have to pay the amount of rupees 20,000. So cash paid means cash is one type of asset, so asset decreases or cash decreases by rupees 20,000, and when we purchase the goods, in that case goods increases by rupees 20,000. That means that is the same amount of goods also increases, and goods, that is one type of asset. So in one case the asset amount decreases by 20,000, and in on another case the asset amount increases by rupees 20,000. So if we will present it in accounting equation, then we can represent it asset is equal to liabilities plus capital. So how will we represent? The amount of cash was rupees 50,000, so cash decreases by 20,000. That means the amount of cash now will be 30,000. And there is one another asset, that is goods, and goods amount increases rupees 20,000. So that is cash asset, we have to represent it in under asset head. We written as that goods is equal to rupees 20,000, and there is no liability, so liability head, that is nil, and a capital amount is same rupees 50,000. Shubham's capital, that is rupees 50,000. So the total amount of asset is equal to 50,000, that equal to nil plus capital, that is 50,000. So the left side is equal to right side. This is called as accounting equation. Then we will discuss another transaction by taking into consideration this transaction or the effect. So the next transaction, that is purchase of asset or goods on credit. So when goods or asset that is purchased on credit, that is known as credit transaction. That means we did not receive the amount of cash immediately, we can receive it on a later date. So when the transaction is made, or that is a case of credit transaction and that affect to the business, we must have to consider that and we must have to record that. So that transaction is made on 3rd April. Shubham purchased a computer of rupees 23,200 from KK Traders. So the Shubham purchase means from KK Traders, that means when the trader's name or the organization name is mentioned and that is called as a credit transaction. So we did not record it under cash head, we have to record it under, that is credit transaction means we must have to record it under the supplier's name from whom we purchase the goods on credit. So in this case, that is the first case, the new asset, that means the computer is purchased, and another one is the new liability is also created, and that is created, that means the amount is due to KK Traders. So we must have to record that. One is, that is asset which is computer, another one is liability, that is KK Traders. Taking into consideration that previous transaction, the amount of asset is equal to 50,000. So under that one is cash. So as the current transaction is relating to credit, so the cash is never affected. So the cash amount remains same, that is 30,000. The goods which is purchased previously, that 20,000 remains same, it will not never affected. Another one is when this transaction is made, the current transaction, that the computer or asset is purchased. So assets enter into the business, we must have to record it, the asset name, that is computer, the amount is 23,200. And under liabilities, that is one liability, that is in the name of KK Traders. The amount is 23,200 and the capital amount remains same, it will not never affect, that is Shubham's capital. The amount is rupees 50,000. So the total amount of asset, that is 73,200, that equal to the liabilities is 23,200 plus capital is rupees 50,000. So the left side that equal to right side. This is accounting equation. The next head of transaction, that is payment of expenses. When expenses are made and we paid relating to that particular head of expenses, that is a case of a cash transaction, and in that case we must have to show that transaction in the form of accounting equation. As it is a cash transaction, the cash amount decreases. So relating to that, one transaction is made on 4th April. Shubham paid rent rupees 3,000. The business rent is paid by Shubham on 4th April and that is a cash transaction of rupees 3,000. So how we have to record that in accounting equation. So when that type of a transaction is made, that shows that, or that describes that, that is one head decreases the amount of cash rupees 3,000 as it is a case of a cash expenditure, and in another case it also decreases the amount of a capital rupees 3,000 or by same amount. So when we have to consider it or we record it taking into consideration that previous transaction, so the cash amount decreases by 3,000. So here the cash amount was 30,000 and that decreases to 27,000 because we paid rupees 3,000 cash, and other aspects that remain same, that means the goods amount, that is 20,000, the computer, that is rupees 23,200, under liabilities, that is KK Traders, that is remaining same, that rupees 23,200, and the capital amount also remain same. Shubham's capital, that is not same, that decreases rupees 3000, that means the Shubham capital is rupees 47,000. So the total amount of assets that will be 70,200 and that equal to liabilities 23,200 plus capital that is 47,000. So the total amount of assets is equal to liabilities plus capital. Amount is 70,200 which equal to liabilities 23,200 plus capital that is 47,000. So the next transaction that is relating to income. When income is made, that is a case of a receipt. So how we have to record that receipt transaction in accounting equation. So there is one transaction made by Shubham Stores, that is made on 5th April. Shubham Stores received a commission of rupees 1,500. So cash received under the head commission and the amount is rupees 1,500. So in this case or on this transaction there is two aspects that increases the cash amount by rupees 1,500 and as it is a case of a receipt, it also increases the amount of a capital by rupees 1,500. So how will we show it in accounting equation? Taking into consideration the previous transaction, the amount of a cash was rupees 27,000. So it increases by rupees 1,500. That means the amount of a cash now will be 28,500 and others remain same. The goods amount rupees 20,000 and the computer asset that is also remain same, that is 23,200 and the amount of liabilities that remains same, KK Traders, that belongs to rupees 23,200 and the amount of capital that is increases by rupees 1,500. That means Shubham's capital will be 48,500. So the total amount of asset that is 71,700, that equal to liabilities 23,200 plus capital that is 48,500. So when we add it or we say in the form of equation, the total amount of asset 71,700 must equal to the liabilities amount 23,200 plus capital that is 48,500. So there is another transaction that is outstanding expenses. So first we must have to know what is outstanding. That means whether it is a case of expenses or income. When the expenses incurred but not paid, that is called as outstanding, and when income received or that is not made in the form of a cash, that means already made that income but we have not received that income amount in the form of a cash, that is called as our outstanding income. So whether may be a case of expenses or income, we must have to be record that in the form of accounting equation when it is affect to the business. So there is one outstanding related item that is relating to outstanding expenses. On 4th April, wages of one worker remain unpaid of rupees 250. That means one worker works in the organization but the amount of rupees 250 is not paid till now. So how we have to record that transaction in the form of a equation? In this case or on the basis of this transaction, there is two aspects. That means one aspect that increases the liabilities because already that expenditure incurred but we have not paid that amount, so that increases the organization liability. And in other cases, as it is a case of outstanding expenses, so the capital amount also reduced by the same amount of outstanding when it was made or the amount of outstanding when that is incurred. So if you will consider the previous transaction, then we record it in the form of equation. The cash amount will never affect because this is a case of outstanding expenses. So that remains same, 28,500. The goods also remain same, that will 20,000, and another asset that is computer that remains same, 23,200. And under liabilities there is another liability amount increases. Already KK Traders that was there, the amount was 23,200, and another one is outstanding wages that is made recently, the amount is 250, and under capital the capital amount decreases. So Shubham's capital was rupees 48,500, that decreases by rupees 250. Now that will be 48,250. So the total amount of cash is 71,700, that equal to the amount of liabilities, that is 23,450, plus the amount of capital, that is 48,250. So if we will compare that, we can say that the amount of assets or the left side must equal to the liability side. That means the asset is equal to 71,700, which equal to liabilities 23,450 plus capital, that is 48,250. So the next head of item, that is accrued income. So how we record that accrued income in accounting equation? First we must have to know what is accrued income. That means income that is already made but we have not received that amount of income. So that's why it is called as accrued income. There is one transaction made by Shubham Stores on 6th April. Shubham Stores informed that rupees 100 is still receivable as commission. So the transaction is relating to commission receivable. That means commission of rupees 100 is made in the business, but the business is not received that amount of a commission of rupees 100. So how will it treat that amount of a commission which is still receivable? In this case, there is two aspect or the effect of a transaction, that is two. In one case, that increases the asset amount rupees 100, that is the accrued commission. Then the second case, that increases the capital amount of rupees that is 100. So if we will consider the previous transaction in current transaction, so the previous amount of cash is rupees 28,250, that will remain same. The goods also remain same, that is rupees 20,000. Then computer remains same, that is rupees 23,200. Another one item of a new asset, that is accrued commission, as it is still receivable. So this is a case of a asset. So the commission amount or a accrued commission increases by rupees 100, and the amount of a liability will remain same. That means KK Traders, that will remain same, 23,200, and outstanding wages, that is another liability, rupees 250, plus the capital amount, that will also increases by rupees 100. That means previously capital was rupees 48,250, now that will be 48,350. So the total amount of asset that will increases by rupees 100 compared to previous transaction, that is 71,800, that equal to liabilities 23,450 plus capital, that is 48,350. So finally we conclude that the amount of asset is equal to 71,800, which equal to amount of liabilities for 23,450 plus the amount of capital, that is 48,350. So this is our today's class relating to various item of a transaction and their effects on assets and liabilities and how we will represent that in accounting equation. Finally we conclude that in every cases, as per dual aspect concept, the total amount of assets must equal to the amount of liabilities and a capital. In our next class we will discuss other transactions in the form of accounting equation and their effects on assets, liabilities and a capital. Till then, bye bye.